Welcome to our eSignal Weekly Forex and Futures Forecast. My name is Jay Norris. I teach trading at Trading University. We'll get to the charts here. First market, the Australian US dollar. Lost US dollar, we've been saying all along, it's on its way to 70 even. You've got support down there. It almost looks like now you're experiencing a short covering rally here, a correction to the upside. No surprise, that's pretty much what markets do too. You had a nice long extended leg down, almost almost 6 full handles down. You're into the dog days now. You're into August, so now I think the time would be ripe for a short covering rally, and it looks like what you're getting here, and we're seeing confirmation in the other markets too, similar market behavior, and we'll see that as we go along. Next market, the dollar Swiss. Dollars had a lot of strength against the Swiss here. You can see it took out significant resistance. You had several daily closes above significant resistance. That's great. On the other hand, you don't have confirmation with weakness in the euro and strength in the dollar index itself. So dollar Swiss kind of on its own out there, trying to break out on its own. And in our experience, that's not likely to happen. You need markets breaking out together. So we see this as definitely bullish behavior overall. We definitely want to continue to look to buy dips. Perhaps right now be patient and look to buy a larger dip. That being said, we're just as long-term bullish on it. However, short-term, as I was saying, similar with the Aussie, dog days of summer setting in here, you may be ripe for a pullback, for a correction here. This is the strongest market though, however, so we would continue to focus on dip buying here. Next market, the dollar index. And here you see the dollar index repelled by resistance. You couldn't get through that resistance, just above 98 even, they're a big level for us. And if you can't get through resistance, that generally means a correction. So again, longer term, we're no less bullish on this thing overall. However, timing and the technicals here pointing towards a correction. Timing and the technicals here look to be pointing for a correction in the markets. So we'll have to see the extent of that. Overall, we're just as bullish as ever long term, and we definitely want to stay vigilant to buy dips in this market. Next market, the euro. And here you'll see what I mean, how the euro is really not confirming that breakout in the dollar Swiss. You definitely had a long side breakout in the dollar Swiss. On the other hand, you didn't get a breakdown in the euro, and if anything, look at the euro has a longer term pattern here. That's your intermediate term pattern of what? That's a higher low, that's a higher low, that's a higher low, right? So higher lows long term in here, that seems to be setting this market up for a potential short covering rally. You always have to remember the market that has the most amount of shorts in it is going to give you the biggest short covering rally, and it sure looks to us like the euro is in that position right now. And we talked about this the past couple of weeks about two-way trade, and we think you'll likely continue to see that. You'll likely continue to see, as a short-term trader, opportunity on both sides, long and short. Long term, however, we still like this guy from the short side. Let me pan out to a weekly chart and give you scale on that. It's easy to lose track over the short term of the big picture, and there it is. And even if you look at that big picture, you can't but help but think, oh yeah, they could have a sizable short covering rally in this market. You could take the euro all the way up towards the 118, even 120 handle, and it would still be firmly entrenched in a bear market. So back to the daily chart, we're likely looking at a coming short covering rally here. Keep in mind now, the hardest thing to do in trading is predict when corrections are going to happen and how long they're going to occur for also. Next market, the gold market, commodities. And there you can see it looks like they've stemmed the bleeding in gold. We were big bears all year long. Now that you've had that capitulation, however, I think that that market's stabilizing for a reason. And again, it's another one where you've got everyone short on it, and it looks to us to be setting up for a potential short covering rally. Long term, however, we're still as bearish as we always were. On the other hand, I like thinking in terms of selling a rally in here And ideally, the bigger the rally, the better. The better positioning you get, the less risk you have selling those big rallies. So that's kind of my mindset for gold. Last market we'll take a look at will be interest rates, U.S. 10-year rates. There's rates, and you could see they've been pretty sloppy. You bottomed out just below 2% with interest rates. Then you had to move all the way just shy of 2.5%. That's a pretty good move in interest rates. And now pretty much you're just consolidating. You got a short-term pattern of lower highs, lower lows there. So definitely we're seeing a correction in interest rates, as a little bit of uncertainty is when the Fed is going to raise rates, and that's showing up in the long end of the curve here. The 10-year note, it almost looks like you're going to have to see a test of 2.1%, even 2% here before they'll get that thing turned around again. And this again supportive of a potential correction in the markets. That being said, I'm on vacation myself. I happen to be able to check in and get the report out this week. On the other hand, that's not going to be the case next week. Like a good trader, right? You sense correction, that's the time to get away. That's the time to go fishing. Counter trend markets are always tricky. Thank you so much. My name is Jay Norris. I teach trading at Trading University, and we'll see you in a couple of weeks.